Pablo, good to see you. How you doing? How you been? Good evening, Miles. I'm on CMF. JP, good to see you as well, brother. How you doing? How you been? Hi, Miles. How was your weekend? It was great. Good to see you as well, Artistic. How you doing? How was your weekend? I think there's an issue with Restream because it's showing one viewer, but obviously there isn't one viewer, but I don't know what's happening with Restream. Oh, there we go. Now it's updating. What's up, Miles? What's up, CMF? Kerry, good to see you as well. How you doing, brother? Good evening. Great. How was your weekend? It was great, JP. How was yours? Hi, good afternoon, Miles. How you doing, boss? I'm doing great, Carlos. Good to see you as well. How you doing? Hi, Miles, the family. Harry, good to see you as well. How you doing? How you been? Good evening, Miles, the CMF. Manny, good to see you as well. How you doing? How you been? Carlos, hi, good afternoon, Miles. How you doing? I'm doing great, Carlos. Good to see you as well. How you doing? Okay, let's do intro, disclaimer. By that time, everyone's tuned in for the first part of the live. Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. We also do Q&As on this live as well, which means if you have any questions, put it down in the comment section. More than happy to help you out. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, welcome to the CMF Live. If you're watching this for the first time ever, if you're regular, let's go CMF. Thank you so much to everyone so far that has liked and retweeted this live. If you're watching this on X, if you're essentially watching this on YouTube, thank you so much to everyone who's also liked and essentially put a comment outside live as well. If you haven't done that, CMF members, just drop a like and a retweet. If you watch us on X and if you're watching us on YouTube, just drop a like. Now, on tonight's live, we're going to be discussing about why the market is possibly so essentially volatile, mainly to do with manipulation, to be fairly honest. Well, essentially, we're going to go through some mixture of news, as always, on tonight's live. We're going to talk about essentially the market movements. We're going to talk about on tonight's live regarding some investments that are entering the crypto market space through institutional partnerships. We're going to talk about some crypto partnerships as well. We're going to go through strategy news as usual. MicroStrategy is expanding itself inside the Bitcoin space. We're going to talk about Binance and CZ on tonight's live also. We're going to go through some news regarding Solana, some investments happening over there. Obviously, some Ripple news to go through on tonight's live, some Bitcoin news to go through on tonight's live as usual. But the first news we are going to be covering on tonight's live before we go international is the crypto situation that's going on right now, the turbulence that's being created, and it started on Sunday, to be fairly honest. But before we do that, let's go start the conversation one last time before we go through the first news on tonight's live. So, good evening, Miles of CMF. How are you? I'm doing great, Bull XRP. Good to see you as well. How are you doing? Good day, Miles of CMF. Mike, good to see you as well, brother. How you doing? Perfect time. About to go through the first part live. Also, I don't know why it's still not showing the correct amount of viewership on Restream. It says there's 10 people watching. Obviously, there's more than 10 people watching, but for some reason, Restream needs to fix up, to be fairly honest. Now, the crypto situation side of the essentially the market space right now, the market space is extremely volatile, is heavily manipulated, and it all started on Sunday when a Bitcoin wallet that was switched off for about a decade decides to turn on and dump an entire market space, which dumps on a Sunday, which means institutions can't even buy in, and it also dumps on the worst liquidity day there possibly is, and it dumps on essentially the crypto exchange rather than the usual way of dumping when it comes to heavy, essentially, wallets on the Bitcoin side. But it all started on Sunday with that one massive wallet dump, essentially flowed into Monday on essentially the market space, still being slightly volatile. And it's all about, at this moment in time, it's about the house needs to win before we go into September. Because going into September, we're expecting some sort of a rate cut because of essentially what Jerome Powell said at his last ever Jackson Hole essentially event, coming out and having very calm stance on the market space, which is an indication of we're going to be having rate cuts in September, which means September should be a good month. Also, at the end of September is when the Clarity Act passes. So before those two major things happen for the crypto space, the market, in other words, the house, needs to win in this scenario, because otherwise everyone's just going to put leverage positions up for long positions, 250x, and call it a day. But here it is. Crypto funds essentially faced a turbulent shift last week, according to essentially CoinShares' latest reports. Outflows hit about $1.43 billion, marking the steepest withdrawal since March. Yet at the same time, essentially, investors were unusually active. Trading volumes in exchange essentially traded products, ETPs, soared to about $38 billion, far above this year's essentially typical levels. The shift essentially highlighted just how uncertain investors are over the direction of the US monetary policies. Reportedly, the past week underscored how sensitive digital asset market remains to signals from essentially the Federal Reserve. Investors were essentially initially worried about the US Federal Reserve's might take tougher stance on interest rates. Fear of tighter policies drove nearly $2 billion essentially dollars out of the crypto markets in just a few days. However, things changed after essentially Fed Chairman Jerome Powell spoke at a Jackson Hole meeting, and his comments were softer than expected, which essentially lifted confidence and brought nearly $600 million back into the crypto space later in the week. This shows how quickly investor sentiments can turn around straight after a speech from Jerome Powell. Investor cautious essentially early in the week weighed heavily on Bitcoin-based investment products, which saw sharp $1 billion in outflows from one particular essentially wallet that was switched off for about a decade from the Bitcoin side. This bearish momentum comes as the essentially naysayers are criticizing Bitcoin's market performance despite recording essentially gains as the year progressed. Ethereum funds also faced pressure but recovered more quickly. After a midweek recovery, Ethereum outflows were held to $440 million, showing its strength. Since the start of this month, Ethereum funds have gained $2.5 billion essentially inflows, while Bitcoin has lost over $1 billion. This change has shifted investor confidence between the two biggest digital assets. Ethereum's inflows now account for 26% of its total asset essentially under management this year, a figure essentially more than Bitcoin's 11%. The numbers show that more investors now prefer Ethereum in the current market space compared to Bitcoin in terms of an ETF, is what they're suggesting. The action was not only in Bitcoin and Ethereum funds. Several altcoins also saw big changes. XRP led with $25 million in new inflows, showing fresh interest. Solana funds also added $12 million, while Kronos brought in $4.4 essentially million. However, not all tokens essentially gained. SU essentially faced the biggest loss with $12.9 million in outflows, and TON saw essentially $1.5 million withdrawal. Ethereum essentially stronger performance compared to Bitcoin shows that investor confidence is diversifying beyond the flagship crypto. At the same time, the inflows into some altcoins prove that investors are still looking for growth beyond the biggest asset. With the US monetary policy still in focus, money moving in and out of digital assets is likely to stay unpredictable. The reason why the market, as I said, is still slightly essentially what they're suggesting is unpredictable. What I will call is just pure manipulation. The house wants to win before we go into September, and if we do get rate cuts, if Jerome Powell actually does go through with rate cuts, then it's extremely positive for the crypto space because we haven't had a rate cut for the longest time. So going into September, we get a rate cut, the market will shoot up for a few days. Then the Clarity Act passes at the end of the month, the market will shoot up again for a few days until essentially things mature and, in terms of more institutions, more banks enter the crypto space for the market to continue going up. But before all that happens, the house has to win in between. The market can't just continuously essentially going up. There has to be ups and downs so both sides of the equation can win. A lot of people got liquidated on the weekend, especially as well, due to that one old decade wallet that decided to turn on from the Bitcoin side. That is unfortunately what happens when dormant wallets decide to wake up one day. Imagine if Satoshi's wallet decided to wake up one day. That would be an interesting dump. Now, putting that to one side, there are positive news that's going around inside the crypto space right now. For example, one pharmaceuticals company decided to allocate 50% of its cash reserves towards cryptocurrencies. Glam Pharmaceuticals is investing up to $5 million, essentially $5 million in digital assets for diversification in their treasury management. This decision involves essentially DeFi strategies such as staking and liquidity provisions advised by Telecom Ltd, positioning them as essentially uniquely positioned of entering the crypto space. Glam Pharmaceuticals, a such clinical stage biopharm based in Tel Aviv, announced the new strategy on August 25th, 2025, allocating essentially 50% of its $10 million reserves to digital assets. The unprecedented move, essentially for the biopharma sector, includes engaging in Telecom Ltd for implementations. GLAM Strategy's decision signals a bold diversification plan in financial management, aiming to essentially improve treasury yields through crypto markets. The move represents a significant essentially pivot from traditional cash management in biopharm industries. GLAM Pharmaceuticals board has approved digital asset strategies today, adjusting essentially 50% of its cash for crypto diversification, marking an industry first in that category. The leadership has engaged in Tenecon Ltd for advisory and implementation roles. This shift aims to enhance capital management practices through innovative means. The involvement of Tenecon Ltd, a treasury management service provider, plays a crucial role in executing essentially the digital asset allocations, and GLAM is now essentially among the first biopharm companies in the world, you could pretty much say, diversifying essentially their portfolio towards cryptocurrencies and ensuring strict counsel and management oversight with its newly formed essentially crypto committee. The company's shift translates the potential market impacts on liquidity and yields, and particularly in decentralized finance sectors. Staking and lending protocols with essentially Ethereum, Bitcoin are likely focal points for GLAM's pursuit, driven by essentially a need for higher yields. And finance-wise, the allocation towards digital assets may yield higher returns, but comes with greater volatility. In particular, essentially scrutiny and regulatory pressure are expected to raise biopharm companies generally have less precedent in crypto exposures compared to tech sectors. And GLAM Pharmaceuticals commented on their shift, emphasizing by saying innovation and carefully strategy balancing are essentially crucial for the market space. Sorry about that. I think the comment section just disappeared. That's not good. I don't know why, but today I'm having problems with Restream. First, it's not showing the proper count of viewership, and now it's making the comment section disappear. That's not good at all. Sorry, people. One second. This is not how I expected today to go. Okay. The previous comments have all been deleted, but the comment section is back. I don't know what's happening with Restream today. Putting all of that to one side. Today, we had a major pharmaceutical company come forward and decide to essentially put 50% of their cash reserves towards cryptocurrencies. That shows credibility towards the cryptocurrency markets essentially right now, which it's nice to see, more sectors from the industry entering towards the crypto space when it comes to institutions, when it comes to hotel service providers, which was essentially Metal Planet, which essentially comes to pharmaceutical companies or scientific companies. More and more industry categories are entering the crypto space and allocating some part of their portfolio towards cryptocurrencies, which is incredible to see, to be fairly honest. Now, and I am genuinely sorry for anybody that did put a question down, because everybody's comments have disappeared. So if you did put a question down, put your question down again. I am genuinely sorry. Hi, Sniper, good to see you as well. How you doing? Now, SBI Holdings and Chainlink is what we're going to talk about next. So Chainlink decided to partner up with SBI Holdings, apparently. Are they doing it just because Ripple is SBI Holdings' partner, or are they doing it because they see it as a strict move for their essentially blockchain going forward? SBI Holdings has partnered with Chainlink to foster the adoption of tokenized securities in Japan, targeting institutional integration, with 76% of local banks expressing investment in essentially interest, according to a recent essentially survey. The partnership could significantly impact Japan's $16 trillion real-world asset tokenization sector, potentially increasing essentially liquidity and reducing settlement times. I just want to make one thing extremely clear. I have seen influencers, which I'm not going to name because I never do. I've seen influencers who are mostly XRP haters coming out today and saying that SBI has chosen Chainlink to tokenize a $16 trillion market space. That is incorrect. As I said before, I don't know what it is, but why do people have to lie inside the crypto space? Why can't people just be truthful inside the crypto space? It's because honestly, when I see people making content for clickbait information, it's pathetic, especially if the person is in the older generation. It's still more pathetic, to be fairly honest. But I've seen people on TikTok, crypto influencers on TikTok as well, and on X, creating these types of videos saying Chainlink chose XRP, Chainlink chose SBI Holdings, SBI Holdings chose Chainlink. They're going to be tokenizing $16 trillion market space. They didn't choose XRP to do it. That's completely false information. The market space is $16 trillion in Japan. Nobody's going to be tokenizing $16 trillion on Chainlink's network. The market space is $16 trillion. I just want to make that one thing very clear, because I've seen so much misinformation on this news. And it's mostly to do with either Chainlink lovers or XRP haters, or people who are being paid right now by Chainlink to promote it as some God-giving, essentially, gift that's going to revolutionize the world. And again, no, nothing bad on Chainlink, and I hope people who hold Chainlink do extremely well for themselves. But the lying needs to stop. You cannot compare Chainlink to XRP, okay? One went through war, the other one walked through, couldn't barely break top 10, which is Chainlink. The other one went through war, is sitting at top 3 while going through war. Just to point that one out. But the partnership essentially between SBI Holdings and Chainlink seeks to expand the adoption of tokenized securities and stablecoins in Chainlink. This alliance leverages Chainlink's interoperability and verification protocols to influence Japan's financial landscape significantly. SBI Holdings Japan's prominent financial, essentially, in collaboration with Chainlink, announced a strategic initiative to enhance tokenization technologies. 76% essentially of the surveyed Japanese banks have expressed interest in investing in these technologies. Just to point that out again, 76% of banks are interested in tokenization in Japan. None of those banks said they're interested in tokenization of Chainlink in their banks. Again, because I want to stop the misinformation that's spreading right now today, especially on this news. This initiative could reshape Japan's financial markets, impacting the adoption of tokenized assets, not Chainlink, and stablecoins. Anticipated improvements essentially include enhanced liquidity, more efficient settlements procedures, and increased compliance with regulatory standards to support the financial ecosystem. Financial implications are noteworthy, with the potential for reduced transaction times and increased market liquidity. Regulatory support from Japan's Financial Services Agency is crucial for the integration of new technologies in the banking sector. Chainlink's technological essentially infrastructure will empower cross-chain applications crucial for enabling cross-border financial transactions. This move aligns with the broader trend of blockchain integration in traditional essentially finance, promising significant market essentially advancements. Insights suggest that the potential for extensive adoption of tokenized financial assets. The strict usage of Chainlink's protocols could bring about increased transparency and accountability crucial for gaining regulatory compliance in Japan's financial sector. We have been building very advanced fund tokenizations and stablecoins (DVP) use cases with SBI for a while now, and I'm excited to see our great work move towards a state of production usage at large scale. I just want to say one thing again. This is essentially Chainlink's co-founder. For everybody that's saying essentially Chainlink is better than XRP, that's what essentially, for everybody out there, for all the XRP hater influencers and the all of a sudden overnight Chainlink lovers out there inside the crypto space, just want to point out one major thing, because all of them are saying, all of the Chainlink lovers are right now saying essentially that Chainlink is a better partner for SBI. That's why it was chosen. It's going to revolutionize everything and so on. Just want to point this out. This is what the co-founder of Chainlink said. In his own words, he said, "We have been building very advanced fund tokenization (DVP) use cases with SBI for a while now. If Chainlink was better than XRP, why doesn't SBI have an SBI Chainlink? Why does SBI have SBI Ripple? If Chainlink was such a better partner, a better blockchain, so much more advanced than XRP Ledger, why doesn't SBI have an SBI Chainlink if the co-founder of Chainlink has been working with SBI for a while now? Why hasn't SBI ventured into a Chainlink SBI? Because it's not on the same level as Ripple. And that's why there is SBI Ripple, And there is no such thing as an SBI Chainlink. Just want to point that one out as well. Because honestly, the misinformation inside the crypto space is just moronic, how much misinformation there is. Especially this few that's just came out of nowhere of comparing, Chainlink to XRP. Why? Why does Chainlink lovers inside the crypto space insist on being embarrassed by the XRP ledger? I don't know. Now, or by Ripple. I don't know, what the point of these Chainlink these Chainlink crypto lovers there is. The ones that have all of a sudden overnight woken up, decide to love Chainlink and hate XRP. I don't know why they insist on being embarrassed by Ripple and the XRP ledger. I don't know what the point of that is. Honestly, as I said before, it's like comparing a Rolls Royce XRP to a skateboard Chainlink. Now, inside the institutional sector and the banking sector, strategy is what we're going to talk about on tonight's live. Our next favorite person inside the crypto space, Michael Saylor. Strategy has decided to increase its Bitcoin holdings to over 3% of the total supply of Bitcoin, which is what we're going to go through next on tonight's live. But before we go through that, let's go inside the comment section first. Let's see what's happening inside the comment section. As I said previously, this is live, which means if you do have any comments or questions, go for it. Even in Miles of CMF, Jason, good to see you. How you doing? As I said previously, I can't see the last comments because for some reason the comment section disappeared, but it's back now. I can see the comments now. I just can't see the previous comments above. Anyone before Hyper Sniper's comment, I can't see anymore. For anyone after comment and anyone that commented after Hyper Sniper, I can see. Even Miles of CMF, Jason, good to see you. How you doing? Most likely these influencers not even lied. Dunning, yeah. Hi, Miles. D, I agree. Hi, Miles. Sorry, I'm little late. Hope I've not missed too much. Nope, you're good, Addy. Good to see you as well. They're both kind of the same. Seriously, BTC Maxis hate on XRP also show full support for Chainlink. Facts. Good evening, Professor Miles and the rest of the family. Let's go, funky brother. Can't we all just get along? Lol, the toxicity is horrible, though. Facts. I would prefer for everybody inside the crypto space to get along, but I can't sit on the sidelines when people are throwing shade on the XRP ledger. But I prefer 100% to get along with everybody. But I also can't let misinformation just pass through about any token, to be fairly honest. I don't like the idea of misinformation on any project. If there is misinformation on any project, I will call it out and I'll say, this is misinformation on Bitcoin, or this is misinformation on Ethereum, or this is misinformation on Chainlink. And I don't know why, but there is so many lies around XRP ledger just to make it look bad for some reason, especially nowadays comparing it to Chainlink. It's ridiculous. God willing, time will essentially which cryptocurrency is better in its utility, XRP or Chainlink. I wouldn't even bother arguing with these people. Facts. Now, that's why I don't call out their names, because they're all, it's like talking to a brick wall to some of them. But also, times are different. People sue. It's not like my era. My era was face-to-face. This era is suing. It shows you how pathetic they really are. Now, strategy. Strategy has confirmed its fourth consecutive weekly Bitcoin acquisition. The company added 3,081 Bitcoins to its treasury this week, spending $356.9 million. The average purchase price stood at $115,829 per Bitcoin. With this essentially addition, Strategy's total Bitcoin holdings have reached essentially 632,457 Bitcoins. The firm disclosed that its total Bitcoin investments now stands approximately $46.5 billion. The average acquisition cost across all holdings is $73,527 per Bitcoin. With this latest buy, Strategy now holds just over 3% of Bitcoin's capped supply of 21 million tokens. Despite the increase in Bitcoin reserves, Strategy's MSTR stock dropped over 4% in the current trading session. The stock is now trading near $343, slipping from its last week's close of $358. This decline has trimmed its year-to-date gains to around 19%. The company used essentially proceeds from MSTR stock sales to fund the purchase. The move comes essentially shortly after stating it would avoid using stock to buy Bitcoin unless essentially the market-based net asset value exceeded 2.5 times. The company previously noted it would only essentially sell common stock when essentially NAV surpasses 4.0 times. Co-founder Michael Saylor hinted at the purchase before the official announcement in a social media post. He shared the company's Bitcoin portfolio and suggested that the market essentially presented a buying opportunity, his remarks essentially precede the formal disclose. Just last week, Strategy disclosed the purchase of 430 Bitcoins also for $51.4 million. It also essentially outlined changes to its stock sale guidance for funding crypto acquisitions. Despite declining market conditions and the recent fall in MSTR stock, the company has maintained its Bitcoin buying strategy. Although MSTR stock faces selling pressure, some industry figures continue to express confidence in the long-term trajectory. The recent purchases reflect a consistent strategy, even as the broader market trend essentially downward happens. So, MicroStrategy now owns roughly 3% of Bitcoin supply. The United States was supposed to own 5% supply of Bitcoin, but they decided not to buy any. MicroStrategy, it might be reaching essentially the United States target of 5% over essentially a long period of time, but it is getting there, 3%, and they're not giving up. Michael Saylor tweeting out to everybody, Bitcoin is on sale. I don't know who he's tweeting out to be fairly honest, because if Bitcoin is sitting anything above $100,000, it's not really a sale for the average person. Above even $10,000, above even $1,000, it's not really a sale for the average person, to be fairly honest. So when Michael Saylor tweets out today, saying to everyone, Bitcoin's on sale, buy it now, above $100,000. I don't know any 9-to-5 person, would purchase an asset like Bitcoin above $100,000 when they could just purchase XRP, XLM, HBAR, even Chainlink, AVAX, Solana, Cardano. How the hell would anyone buy Bitcoin as an average person at above $100,000? That's not sale. I don't know what the concept of a sale. I don't think Michael Saylor understands what the word sale means, to be fairly honest. But Bitcoin sitting above $100,000 is not a sale for the average person. It is a sale for maybe an institution, but not for an average person. Binance is what we're going to talk about next. Binance's CZ family office has decided to back another BNB treasury, which is quite impressive, to be fairly honest. Before we talk about Binance, let's go start a comment section first, and then we go straight into the next live. So straight into the next news. Let's go start a comment section first before we go straight to the next news. Let's see where we were at, and then let's see where we're gonna go. I always enjoy the quality of your streams when I get the chance. Thanks for your highlights and reasoning, mate. No problem, T-Rex. Thank you so much for the nice comment. Hi, Miles and CMF family. Sorry I'm late. Good to see you all. I'm ready to listen to fact news. Let's go, Carl. Carl, good to see you. What are you doing? Like and repost the live, folks. Joe, facts. If you haven't liked or retweeted CMF members, please like and retweet this live. If you watch us on YouTube, just like the live as well, and put a comment outside the live on YouTube and X. And for everyone who has done that, thank you so much. Also, I don't know why still the count isn't fixed. There's obviously more than 17 people watching, but for some reason, Restream is having problems still. Hi, Miles CMF. Stormy, good to see you. How you doing? How you been? Hello, Miles and family. Scott, good to see you. How you doing? How you been? Have you already talked about the Gemini credit card for XRP? I haven't. I'm going to talk about towards the end of the live. Good evening, Miles and family. Good to see you, Diamond. How's things? Miles, do you have an idea what the mining cost of Bitcoin is at this moment? An idea of what the mining cost of Bitcoin is? No, I couldn't tell you off the top of my head how much it's going to be costing. Essentially the mining equipment is going to put you back quite a bit. You need to have a warehouse size to be able to mine on that level, to be fairly honest, to be able to compete with the 5 biggest mining industries out there. There's so much hate for XRP, it's so unjustified. Facts, absolutely facts, what Shelly has just said. Let's go, share the live. Let's go, Scott. Good to see you as well, brother. How you doing? Binance. Binance's CZ family office backed another BNB treasury launch in the US, B-Strategy, a digital asset investment firm founded by former Bitmain executives, plans to launch a $1 billion crypto treasury focused on investing in BNB only, the native token for Binance's ecosystem. According to essentially an announcement that came out today, the new BNB treasury is backed by YZI Labs, the family office of Binance's co-founder CZ. The new company will be essentially structured similarly to the 10x Capital, which recently launched a BNB treasury with essentially YZI Labs and support a spokesperson for B-Strategy told Cointelegraph. To fund its crypto treasuries, 10x essentially capital raised $250 million with YZI Labs help in July allocating the capital essentially to accumulate and hold BNB as a long-term reserve asset. We plan to collaborate with US-listed companies through a private placement, the representative said. Following the capital injection from its placements, the listed company will purchase BNB, transitioning essentially its business model to focus on holding and managing BNB assets as essentially a dedicated treasury entity. We aim to serve as a bridge between the US and Asian markets. There is a significant demand from Asian markets seeking access to US essential stock market, and they trust our team to help manage their investments within this treasury strategy. YZI Labs, formerly known as Binance Labs, is led by Ella and essentially overseen by CZ. According to Cointelegraph indexes, BNB is the fourth largest essentially crypto token by market capitalization, worth essentially up to $120.3 billion at this time of writing. Beyond trading, BNB is used to pay for transactions, participants essentially in staking, and governance, making it central essentially across to Binance's broader ecosystem. Companies embracing BNB as a reserve asset have emerged in recent months, with investors essentially sending mixed signals through the stock performance, and shares of the CEA essentially industry surged 550% after the company unveiled essentially plans for a BNB treasury similar to the BNB network company's $500 million BNB treasury vehicle was essentially also funded last week. There's a few companies coming out right now essentially creating a BNB treasury, which, BNB is a great asset, to be very honest as well. Very great asset. Now, on the topic of institutions coming out and creating some sort of treasuries for certain crypto projects, Sharps Technology comes out today and decides to create a $400 million Solana treasury initiative. Sharps Technology has announced a $400 million essentially private placement to establish a Solana digital asset treasury, marking a strategic shift from its medical focus. This move positions Sharps at the forefront of institutional blockchain adoption, significantly impacting Solana's status in the DeFi essentially and driving up its institutional holdings. Sharps Technology announced a $400 million private placement to establish its largest Solana digital asset. This marks essentially one of the biggest movements this company essentially has taken inside essentially the digital asset space. Executives, including Alice as the CIO, will drive this strategy, with James Zhang advising this strategy. Institutional investment participants include Parafai and Pantora Capital. The shift focuses on digital asset treasury developments. Sharp Street pivot towards a treasury as a service model will position us as a leader in institutional blockchain adoption, said Alice Zhang, Chief Investment Officer of Sharps Technology. Following the announcements, Sol holdings also increased significantly, further reinforcing Solana's status as a key asset inside the DeFi space. The shift aligns with corporate crypto treasury proceeds seeking to emulate success like MicroStrategy did with Bitcoin, but they want to do with Solana. The focus raises market attention towards Solana and similar blockchain ecosystems. The initiative emphasizes Solana's growing institutional adoption, with potential effects on market dynamics, such as increasing activity in DeFi protocols. Analysts also expect freeze assets essentially on competing with platforms, as essentially Sol capitalizes on emerging opportunities. Data and historical trends also suggest that potential outcomes for Solana, including enhanced liquidity and governance roles in DeFi protocols. The strategy aligns Sharps with digital asset expansions and making Solana a principal asset. So we have a company that's decided to create a BNB strategy, and now another company that's decided to go into Solana's treasury as well. Moving on from that and going a little bit international on the news, but obviously staying on relative topics of cryptocurrencies, Arkham Intelligence has revealed something quite interesting. You see, the majority of countries that have some sort of a crypto portfolio, it's because they've seized it from criminals. So, for example, the US's crypto portfolio, it's seized assets from criminals. So is the UK, so is the EU's, and, the list goes on. Arkham Intelligence revealed that the assets that the UAE, the United Arab Emirates, is holding is actually mined Bitcoin. So here it is, $700 million Bitcoin holding originating from mining in the UAE. The UAE has emerged as a major government Bitcoin holder, but its path was very different to the traditional path that governments have started their crypto portfolios, which was seizing assets. Its $700 million stash, flagged by Arkham Intelligence, wasn't brought or even seized. It was mined by a facility built in 6 months in the UAE, showcasing an industrial approach to crypto reserves. So the United Arab Emirates government actually has a Bitcoin mining facility. If you didn't know, now you know. Arkham has essentially identified $700 million in Bitcoin held by the UAE, mined through Seattle Mining. The UAE now ranks as the 4th largest government Bitcoin holder behind the US, China, and the UK. Blockchain intelligence firm Arkham Intelligence identified a cluster of Bitcoin addresses holding approximately 700 million Bitcoin, $700 million in Bitcoin, attributing them essentially directly to the United Arab Emirates government. The analysis revealed that these assets were not acquired on the open market or through seizures, but were instead mined operationally by Seattle, a firm majority owned by the Abu Dhabi royal family. This attribution, essentially a first for a sovereign wealth operation of its kind, was essentially corroborated by matching an on-chain mining activity with satellite imagery of facility constructed in Al Halim Island in 2022, Arkham said. According to Arkham analysis, the scale of the UAE's mining endeavor is substantial. Their essentially investigation indicates that the state-backed operation has successfully mined approximately 9,300 bitcoins since its inception. Of that total output, the entity is still holding at least 6,300 bitcoins, suggesting a disciplined long-term holding strategy rather than immediate, essentially, monetization of the assets. The mining-based accumulation strategy instantly places the UAE among the most significant government holders of Bitcoin globally. Within Arkham's own essentially own data, the UAE now ranks as the 4th largest government entity by Bitcoin holdings, ranking behind only, as I said, the United States, China, and the United Kingdom, and notably ahead of more publicized national holdings like those of El Salvador. Meanwhile, the broader landscape of the government's Bitcoin ownership, as tracked essentially by others and monitors like Bitcoin treasuries.net, provides a critical context of the UAE's position, and the data confirms that a total 12 government entities currently holding a combined 526,353 bitcoins, valued at over essentially $59 billion. 12 governments altogether, their Bitcoin value sitting at $59 billion. But if you didn't know, now you know. Essentially, the UAE royal family is mining Bitcoin. So far, they've mined $700 million worth of Bitcoin. The vast majority of these holdings are concentrated through key players. The United States government leads with 198,021 bitcoins, followed closely by China with 190,000 bitcoins, and then the United Kingdom, which holds 61,245 bitcoins. And the entry of the UAE into this exclusive club through a uniquely organic method challenges the existing paradigms of how a nation builds a digital asset reserve. So, UAE government isn't seizing people's bitcoins or cryptocurrencies. It's actually just mining its own Bitcoin, which is an interesting method, to be fairly honest. Now, moving away from the UAE and mined Bitcoin to Citibank, which has just come out with a quite interesting report, but a truthful report, a report that most banks fear when they think about it, genuinely fear. Because, you know, the 42 banks that try to stop through banking organizations and associations, the OCC, from giving Ripple a license, or essentially, you know, Circle license, or even Paxos is going to apply for a banking license, it shows you how much the banks fear a digital world. Because a bank will use your deposits, your money, to trade on. If we go into a digital world where everybody has a wallet, then the bank won't be the one keeping your money, your wallet will, which means the banks can no longer trade on your money, which is why banks fear a digital world, why they want to stick around, because they can use your money to trade with. But they can't do that in a digital world anymore. And that's why the banks fear Ripple. That's why, you know, some banks just hate Ripple, because they know what Ripple can do, what its potential is once it also gets a banking license. It's pretty much game over for the traditional banking sector when Ripple gets a banking license. That's why they had 42 banks line up through banking associations to tell the OCC to slow down their progress, because they don't want Ripple to have a license, because it's game over. If everybody has a wallet, what's the point of holding money in a bank? which means the banks can no longer trade on your money, which means we can have bank collapses, which is why some banks decided smartly to enter into fintech companies and become some sort of fintech banks and blockchain banks, and some just decide to stick with their traditional ways, which they're guaranteed to go, bankrupt. But here's the report. Citi warns stablecoin yields could trigger bank outflows, a repeat that happened in the 1980s. Paying interest on stablecoin deposits could unleash banking shocks similar to money market fund booms of the 1980s, according to a new report from Citi's Future of Finance head, Ronit. So, published today, a report comes out from Citibank. So this is their published report. The report warned that higher yielding stablecoins could attract significant capital away from traditional banks. Facts. If more people understood cryptocurrencies and stablecoins, knowing that if they take their US dollars, out of their JP Morgan Chase bank accounts and put it inside of stablecoins, they can earn a yield from their stablecoin. You can make money using your own dollars. Might not be a lot of money, but it's still money that you're going to be earning on top of it because you're earning from your stablecoins. And if more people caught on to the idea that they can make money from stablecoins just by holding their money there. So, for example, if someone is holding $100,000 in the bank, they can take their $100,000, put it into a stablecoin, and earn on that stablecoin. They can't do that with their traditional banking systems, but they can do that in their digital world. And that's what Citibank is referring to, where something that happened in the 1980s is about to repeat itself. Ronit Gusk, the head of Citibank, compared the potential outflows that's going to be happening out of banks to the rapid rise of money market funds in the late 1970s and 1980s, when bank deposit rates were tightly regulated. Those funds ballooned from around $4 billion in 1975 to $235 billion by 1982, outpacing the banks and leaving them with a weaker deposit basis. Federal Reserve data shows that between 1981 and 1982, withdrawals from the bank accounts exceeds new deposits by $32 billion. Sean Vertex, the banking, essentially, and capital markets advisory leader at PwC, echoed the same concerns that Citibank has just shared, where people are going to be moving away from traditional banks. Banks may face higher funding costs by relying more on wholesale markets or raising deposit rates, which could make credit more expensive for households and businesses, he said. The comparison underscores how even small shifts in consumer behavior towards higher yielding products can ripple across the banking sector. The issue has been brought to the forefront by the Genius Act, which essentially prohibits stablecoin issuers from paying interest directly, but does not explicitly ban exchanges or affiliate businesses from offering yields. Banking groups argue that essentially the provision creates a loophole for exchanges like Coinbase, Binance, and so on to give people money on top of their stablecoins when they're essentially earning some sort of a yield. The Bank Policy Institute, joined by other industry organizations, argued that regulators to close what they say is an indirect pathway for stablecoin issuers to attract deposits for yields. So, just to make it very clear for everybody, the greedy, yes, that's right, the greedy banks that are already essentially abusing their rates when it comes to the average Joe are angry that the regular folks are going to be earning on their stable coins. So billion dollar banks who are earning billions of dollars are angry that the average Joes are going to be making a little bit of money on top of their US dollars if they take it out the banks and put it into essentially a USDT, USDC, RLUSD, and earn back more stablecoin essentially yields. So they're angry that the average person is going to be earning a little bit on top of their US dollars if they turn it into digital dollars. In a recent letter, they warned that the practice could disrupt credit flows to households and businesses. The organization has even projected potential deposit outflows of up to $6.6 trillion from US banking systems if people decide to take their money from the banks and put it into digital dollars. Two major crypto advocates strongly oppose the push to tighten restrictions. Two major industry organizations have already urged lawmakers to reject the proposal to close the alleged loopholes. They essentially argue that doing so would give banks an unfair competitive advantage while stifling innovation and consumer choice in the digital asset space. There's a reason why they essentially left that loophole open in the the Genius Act, because they wanted to leave it open. So even if the banks try to close that loop some sort of a way, they're not going to be able to. For many in the crypto space, the ability to offer yields is not only a competitive feature, but also central to the long-term value proposition of stablecoins in finance. The US government has largely positioned itself in favor of stablecoin developments. The Treasury Secretary Scott Benson said the government would use stablecoins to bolster the dollar's role as a global reserve currency. We are going to put a lot of essentially thought into the stablecoin regime. As President Donald Trump has directed, we are going to be keeping the US dollar the dominant reserve currency in the world, and we will use stablecoins to do that, Benson said. The statement highlights the potential importance of the issue, with stablecoins seen as both domestic policy matter and geopolitical tool. The debate highlights a growing divide between banks and digital asset sector. While banks see stablecoin yields as an extensional risk to their deposit base, crypto companies frame them as a part of a new financial ecosystem. The outcome of the regulatory discussions could shape not only the future of stablecoin adoption, but also the balance between traditional and digital finance in the US. So, greedy banks are essentially angry that the average person is going to be earning yields on their digital dollars because people will take their money out of the banks and go towards stable coins. I mean, this is why banks need to collapse, because bank CEOs, executive board members, CFOs, CIOs, CTOs, whatever, their higher profile employees are taking essentially, bonuses home. $150,000 bonuses, $250,000 bonuses, $1 million bonuses home, and they're worried about the average Joe making $20 on top of their USDT. This is one of the reasons why banks just need to collapse, because their greed needs to come to an end, and it essentially needs to come to an end now. So honestly, the more I see Ripple advance into the banking sector, and the more I see the banks crying on the other side, just makes me happy. It makes me cheerful that Ripple is pushing for the average person, while as essentially the banks on the other side are crying and complaining to the banking associations to slow down their progress, which isn't working by the way, as we can tell. The case ending, Ripple advancing internationally, Ripple applying for a banking license and a Fed master account. Every step that Ripple takes, the banks are crying. The simplest way to put it. Now, global regulators is what we're going to talk about. Before we talk about that, let's go inside the comment section first. Let's see what's happening over there, and then we'll go straight into the next news. So let's see where we're at. As I said previously, this is live, which means if you do have any comments or questions, put it down in the comment section. I'm more than happy to read them out and give you a perspective or essentially or matter. Let me see where we're at. We were at here. Scott, let's go. Carlos, let's go as well. Hi, Miles. Why is crypto keep dipping? Is because of manipulation, Johnny. The house needs to win a few times. The live count on X is currently 407. I'm unable to comment on X, so for those on X that can't comment, go over to YouTube. Thank you so much, Shelly, for letting me know about that. Yeah, I don't know why the live count is saying 28, but on X, yeah, I mean, it's 407. The restream is having problems, to be fairly honest. Thank you for letting me know about that, Shelly. Good evening, Miles and family. Ian, good to see you. How you doing? How you been, brother? Let's go, CMF. Great days ahead. Facts. Hi, Miles, and evening. Hi, CMF, and evening, Miles. Good to see you as well, Peg. How you doing? Let's go, CMF. Let's go, JP. Is there a scenario where an online wallet can be liquidated by its maker? Yes and no. Liquidated, no. Frozen, yes. So there has been occasions where USDT wallets were frozen for illicit activities. So that's happened before. Meme coins can also get blacklisted. So there's been multiple occasions when people essentially brought in early into a meme coin, and then when they went to sell, they got blacklisted. Their wallet was blacklisted, which means they couldn't sell. So there has been occasions where not liquidated, but wallets have been blacklisted or frozen. And that's only happened either on USDT or in general in the meme coin section. Be careful about that as well. They do blacklist wallets if you get in too early. Off the exchange, of course. Yeah. Everyone like and retweet the live. Let's go peg facts. If you haven't already liked and retweeted, please like and retweet this live. Even about the CMF peeps holding tight. Let's go Semper. That's why so many entities want their own stablecoins. They're afraid to lose liquidity that can go in the other hands. Facts. But the thing is, the beauty of that is nobody's going to trust them. Look, the same way nobody trusts Swift anymore. As I've said previously, everybody, says, oh, Swift is bad because it's slow and it's expensive, which is true. But we've been using it for years. If that was the case, they would have replaced it a long time ago. The reason why Swift is a failure, as I said many times, is because it's a political tool, which means no matter how much Swift tries to switch and turn and make itself better, it's always going to be known as the political tool that goes around and sanctions countries. The same way it sanctioned a few other countries, and recently Russia, which then meant Russia had to come up with its own sort of payment system to be able to, essentially still progress as a country going forward, is the simplest way to put it. But that's why, no matter what Swift does going towards a digital world, it's always going to be known as the political tool, not the messaging tool, to be fairly honest. And it's just going to collapse somewhere down the road because the trust is going to go away. China doesn't trust it. Russia doesn't trust it. China's the second biggest market on the planet. Somewhere down the line, Swift could even sanction other countries, which would just cause more fear. And everybody wants to move away from Swift, to be fairly honest, because it's a political tool, not a payment tool or messaging standard. Same goes with the banks. No matter how much the banks try to create their own stable coins and tell the regular folks, use our stable coins, use JP Morgan's, if they did create one, use JP Morgan's retail stable coin and so on. I'm not going to be using it, and anybody with brain cells wouldn't use JP Morgan's essentially retail stablecoin. I would rather use any day of the week, essentially RLUSD for a stablecoin, USDT for a stablecoin, even though they don't show transparency. I would even use USDC as a stablecoin, which they even depegged once. But I wouldn't even touch JP Morgan's retail stablecoin with a 10-foot pole. I wouldn't touch any bank's essentially stablecoin with a 10-foot pole, to be fairly honest, because I know how banks operate. I know how greedy they are. And they show their greediness when the average Joe wants to make $20 on top of their stablecoin and a yield. And the banks are worried about that, saying, no, the average person should not be earning $20, $30 on top of their essentially stable coins. How dare they move their money from the bank? Who wants to support such a stupid ideology that the banks have? Nobody. Nobody with a right brain cell would say, I want to support the banks. When they're so greedy and they care about the extra $20 you're going to be making on a stable coin. Obviously, it won't be $20 if everybody joins, but you get the picture. So no matter how much the banks try to fit in to the retail section and pretend they're one of us and they care about us, we know for a fact they don't care about us. We know for a fact they care about their own pockets. That's why they've weaponized the SEC to go after the crypto space. They weaponized the OCC, the FDIC to go against the crypto space. And that when that didn't work, essentially, when Gary Gensler got replaced and Trump became president, the banks were really scared. And then the Genius Act passed. And the banks are still angry that the Genius Act passed because that gives leverage towards stable coins and not really towards the banking sector. And then Ripple applied for essentially a Fed master account and a bank license, essentially, which made the banks even more angry, telling the banking association slow down Ripple's progress. Why would anybody in their right mind stand with the banks? Honestly. So no matter how much the banks try to fit in with the regular folks and create a stable coin and say, use JP Morgan stable coin, use, whatever bank stable coin. No. I'd rather use USDT, which I don't fairly trust because they're not transparent, but I'd rather use USDT. I'd rather use USDC. And by a mile, I would rather use RLUSD. And I think everybody would stand behind me on that. Because we're really tired of how much greed the banks have over us, how much leverage they have over us. And that's the same reason why Swift is not going to do well, no matter how much it tries to change itself, because it's a political tool. No matter how much the banks try to fit in with the average folks, it's just not going to work. What up, Miles? Is CMF sending much love? Patience is virtue. Know what you hold. Facts. Let's go, Christopher. Let's see where we're at. Miles, do you think we will see a gold candle on XRP this week? I'm pretty sure would love to see that. I would love to see that as well, be very honest, Peg, if we see a gold candle on XRP. Are we going to see a gold candle on XRP this week? Look, I'll be honest, going into essentially next month, two major things need to happen. One is rate cuts. According to the Jackson Hole speech, essentially Jerome Powell had, seemed quite positive on that matter regarding having a rate cut. So we could possibly get that rate cut in September, which is going to be excellent for the market space. That should give the market space a boost because we haven't had a rate cut for the longest time. Second of all, we're also going to be at the end of the month, next month, at the end of the month in September, we're going to be having also the Clarity Act passed, which is big for the entire crypto space, massive for the entire crypto space. So those two things should push the market on the bullish side. In between those two things, we're going to have that downtrend and uptrend and downtrend and uptrend because the house needs to win in between. So could be possible to have that gold candle XRP. Anything's possible. Miles, this is why banks need to go under. Love it, Miles. Let's go, Peg. Let's go, Scott. Greedy banks. Banks need to collapse. Miles spitting off unfiltered facts. Careful, brother. Protect this man. Let's go, Ray. These institutions are trying to put out the retailers thoroughly from the XRP market facts. Hi, Miles, the CMF Gold Dragon. Good to see you. Why you doing? How you been? Hope you're right, Miles. And these banks keep on crying. They're definitely crying. Trust me. Because all they're doing right now is just complaining. Absolutely complaining. Every bank is complaining. 42 banks started complaining to banking associations when Ripple applied for a license because they know once Ripple gets a license and a Fed account, pretty much game over. In the long term, it's pretty much game over. Not overnight, but long term, it's game over. Hi, guys. I'm back to YouTube. Let's go, Carl. I'm going to send my bank a box of tissues. Let's go, autistic. What XRP price range do you consider an ideal buy zone at this price? At this price is perfect. Honestly, it's absolutely perfect. Even 10 cents lower, why not? 20 cents lower, why not? 10 cents higher, why not? Because in my eyes, the XRP price right now is extremely dirt cheap for what it's going to become later on. So buying it 10 cents cheaper, 50 cents, 10 cents cheaper, 20 cents cheaper is going to make a difference if you're going for the long term. If you go for the short term, sure, it makes a difference. You want to get it, cheaper than as much cheaper as possibly you could, to be fairly honest. But if you're going for long term wise, then at this price is perfectly fine, to be fairly honest. Because if you go long term, it doesn't really matter if you catch it at this price. If you're going short term, then maybe you want to wait for it to go cheaper. Do you think rich people that's what I would say, Terex. Do you think rich people like Elon Musk or Bill Gates holding XRP? Do you think they hold a huge amount of this crypto? Carl, great question. Do you think rich people like Elon Musk or Bill Gates holding XRP? Do I think rich folks, wealthy folks like the idea of Elon Musk or Bill Gates holding XRP? I don't think they'll care as much if they hold XRP or not. Do they hold XRP? Is essentially the second part of the question. I personally think Elon Musk holds maybe, but I don't think Bill Gates does. What's up, Ian? Hope you're well. Let's go, Semper. How you doing? Off topic, but diversifying. Do you think silver will take off? It's up, but it seems to lag. There's always been a discussion that silver could possibly take off, and it's a possibility. Sure, I would say. It's a possibility. Somewhere down the road, where will we get mortgages and finances from? In what, the crypto space? If the banks shut down. Not all banks will shut down, to be fairly honest. As I said, the banks that essentially adapted to a blockchain dynamic will continue forward existing. The banks that decide to stay traditional will be the ones that go under first. But also is that fear of everybody taking out their money out of the banks to run towards cryptocurrency wallets, which could cause the banks a lot of headache, a lot of pressure, and a lot of crying, to be fairly honest, because they're going to lose all that trading money that they previously had. You could run towards fintech companies for essentially, financing, essentially, or getting mortgages. To be fairly honest, we don't need banks in the long term if we want to go towards mortgages or financing. I'll be very honest. There are essentially, firms out there already inside the crypto space that do offer these services. For example, Nexo is one of them, offering essentially borrowing and lending services against your own cryptocurrencies. And the idea of mortgages is not very far-fetched from a fintech company introducing that idea to the rest of the world. For example, CoinMove. My own blockchain startup company is going to be offering essentially mortgage services, obviously not through me, for a third party, but it's essentially going to be offering mortgage services and lending services and borrowing services through essentially CoinMove. So people could get mortgages through CoinMove, essentially they could borrow against their assets through CoinMove and so on. And as I said, not all banks will be going under, only the ones that decide to stay traditional. And the most smartest thing for banks would be to turn it to fintech companies. Otherwise, it's going to be very difficult for them to operate in the long term if they don't turn into fintech companies. For example, BNY Mellon did it best, to be fairly honest. BNY Mellon decided to create some sort of a tokenization platform. That's what banks should be doing, adopting to that type of ideology of going towards tokenization, maybe, or essentially creating a custody, essentially wallet for institutions. Doing those sort of things will keep those banks alive for the next 100 years or 1,000 years. But if banks don't go into custody services or essentially, tokenization services or some sort of ideas like some sort of sectors like that, it's going to get very difficult for them to operate later on. So they have to turn to fintech companies. They have no choice. The longer the banks decide to argue against the crypto space, the longer they're going to be losing the battle. The faster they decide to just, as the old saying is, if you can't beat them, join them. The banks just have to join the crypto space, the crypto companies, and just turn into fintech companies to be able to survive, to be fairly honest. But you could get lending and borrowing services already available inside the crypto sector. You could do it through the banks, or you could do it through, not the banks. For example, essentially Nexo. Mortgage services you will do soon through platforms like CoinMove. How do stablecoins can guarantee fees? Exactly. They create more and back them with assets. Where is the positive cash flow in this for the issue? So regarding stablecoins essentially obviously pegged. Let's say, for instance, RLUSD, for example, or USDC or USDT. Stablecoins are pegged to a 1-to-1 ratio. What's backing them essentially is cash reserves, as US bonds and so on. That's what's backing those. So when they print, they gotta back it with some sort of US bonds or cash reserves and US dollars and so on. And regarding fees, it's up to, for example, Tether USDT, Ripple RLUSD, Circle USDC. It's up to them to maintain those fees going forward. But they have to back every time they print with US bonds, which strengthens the US dollar. And they also have to back it with cash reserves, which also strengthens the US dollar, which is why I've said for the longest time when people said the US dollars is going to go to zero, I said it's quite difficult for the US dollars to go to zero because even in a digital world, the US dollars is the number one. USDT, USDC, or USD, PYUSD. You get the picture. So US dollar is never going to go to zero. It's always going to be staying number one, even in a digital world. And every time a stable coin prints more digital dollars, they back it with US bonds, which makes the US dollar stronger. They back it with US dollars cash reserves, which makes the US dollar stronger, which is why Scott Benson went online, essentially in front of senators and Congress and even on the news, and said on live news that essentially we're going to be dominating the stablecoin sector, especially that we've passed the Genius Act, and the US dollar is going to stay number one, even in a digital world, and that digital dollars actually strengthen the US dollars because they have to buy US bonds, which is why essentially Tether is ranking higher than most countries when it comes to US bonds, which strengthens the US dollar. On the rate cuts, could the Feds make an emergency rate cut before the scheduled date? Yes, they can. If the Feds wanted to make some sort of essentially emergency rate cut, yes, they can 100%. Only if XRP goes to £10,000 is what Funky Brother said. If the banks are down, only if XRP goes to £10,000. Possibility, consider variable change. But I will say, I agree with 99% of things you say, but I'm skeptical about the banks are too powerful not to come out of this victorious. Well, so far, the banks haven't been victorious, if you think about it. So, essentially the banks 100%, in my opinion, weaponize the SEC to go after companies inside the blockchain sector, and especially going after Ripple. Gary Gensler didn't just wake up randomly one day and decide to sue Ripple into the ground and look like a moron in front of senators. He didn't decide to do that voluntarily. There was somebody pushing towards that sector. You could say it was Elizabeth Warren that was pushing Gary Gensler to do those things. But then again, Elizabeth Warren also isn't the type of person to wake up one day and randomly decide to attack a company. She's the type of person that, doesn't voluntarily do anything for free. She does it if she gets paid or there's something in it for her. The banks weaponized the SEC to go after the crypto space, and especially after Ripple. They went essentially for a few companies around Ripple inside the crypto space and then targeted mainly for Ripple because they know how much of a threat Ripple was going to be. Well, Gary Gensler got fired, you could pretty much say, or left, more technical term to be used, left essentially the SEC, which angered the banks that Gary Gensler essentially left because Trump became president of the United States. And the Biden administration no longer had the monopoly they had over the SEC and the banks telling the Biden administration what to do. So Gary Gensler leaves, Ripple case slowly comes to an end, which it finally did, and the banks are not happy about Ripple advancing further. Then Ripple essentially applied, also during that time, Ripple went international. So the banks inside the US thought, we've slowed down Ripple's progress. This is great. But then Ripple geniusly decides to go international. They start getting licensings, first of all, in Singapore. Monetary Authority Singapore give Ripple a license pretty much straight away. And then they got licensing in Japan, the UAE, and the list just goes on of how essentially Ripple expanded itself internationally. During that time, Ripple decided to work with banks outside of the US. For example, HSBC Hong Kong and Standard Chartered Bank decided to go partner with Metico and create a custody service, essentially an institutional custody service in that sense with Ripple, because Ripple brought out Metico. And a lot of people argue that doesn't mean Metico essentially make partnership with HSBC, essentially, it's because, Ripple and so on. People are morons. Don't listen to people like that don't understand how the corporate sector works. Ripple buying out Metico makes Metico a Ripple company. Whatever Metico does, it comes from all those above that, which is Ripple. So Ripple decides to expand internationally, which angered the banks in the US even more on that sense. And then the Ripple case comes to an end. And pretty much Ripple has now a monopoly over the financial sector, you could pretty much say, internationally on that basis. They even got Japan, SBI, one of the biggest firms in the Japanese market space, and you could pretty much say even in the world on a scale, to create a Ripple SBI. That's how far they took it on that sense. And then the case comes to an end, and the banks are angry in the US that Ripple was able to close this case and be able to move forward. And they've also expanded internationally and brought out a few other companies. And then Ripple decides to wake up one day and create RLUSD, which straight away after that, a little bit of time passes, a few months passes, we get this Genius Act passed, which angers the banks even more. It's like, what is happening? First, we tried to slow down Ripple's progress. Ripple went international. Then the Ripple case comes to an end. Then the Genius Act passes, which has a loophole for stablecoins, essentially people to be able to earn yields on that. That made the banks even more angry. So far, the banks are losing, is what I'm trying to say. And then, essentially, when Ripple applied for a banking license, it angered the banks even more. So what is happening? Ripple, not losing in the SEC case. Ripple went international. Ripple brought out companies. Ripple was applying for a banking license, and now 42 banks are applying to slow down Ripple's progress through banking organizations because they're scared of what the next footsteps of Ripple is going to be, and especially getting a Fed account. JP Morgan said they're going to start charging, money for information to fintech companies. That's how much jealousy there is towards the banking industry. But so far, the banks are losing. It might not look like it because these banks are behemoth. Genuinely, might not look like it because these banks are behemoth. But if you look at the step-by-step so far, they're losing. They're losing and they're angry. They're losing because they lost trying to slow down Ripple's progress with the SEC. They're losing because they lost because Ripple went international. They're losing because Ripple essentially RRUSD stablecoin and Genius Act passing through essentially. They're trying to close down the loophole. They're angry because Ripple's applying for a banking license. They're losing so far is what I'm trying to say. So regarding essentially the banks are too powerful, all this saying in the book, there's always someone stronger than you out there. And it might not look like it. It might look like JP Morgan, essentially all these major banks or, absolute massive monsters inside the financial sector, which they are. But if you really look at what's happened, they've lost so far. And they're going to continue losing if they don't adapt to what Ripple's going to be doing. And no matter how much essentially JP Morgan tries to create on the Ethereum chain, on their private Onyx chain, for example, when the SEC was weaponized to go after Ripple, and Ripple was battling the SEC and then going international, JP Morgan decides to go on Ethereum's chain and create their own Onyx chain and make it a private banking chain. If Onyx chain was extremely successful for JP Morgan, for example, if it was so extremely successful, JP Morgan, why are 42 banks trying to slow down Ripple's progress? If Ripple is a nobody, if Ripple is a speck, if Ripple is useless, if the XRP ledger is useless, if XRP itself is useless, if it's trash, if it has no future, it's a laughable asset, then why are 42 banks applying to the OCC to slow down its progress? It's a genuine question, to be fairly honest. Because a lot of people essentially say inside the crypto space, not you, but a lot of people inside the crypto space say, Ripple is trash, XRP ledger is trash, XRP is trash, it has no future, there's nothing to it. Then why are 42 banks going through banking associations to tell the OCC to slow down the progress? Why was the SEC weaponized to go after Ripple? These are genuine questions. If it's such a company that's a nobody, if it can't even compete on their level, why even bother try to slow down their progress? If they're a nobody, if Ripple's a nobody and the XRP ledger's a nobody, why even bother? Why invest time, money, resources to slow down their progress? Because they are somebody, because they're going to become somebody. So the banks may seem powerful, and they are, but so far they're losing badly. That's why they're trying to close the loophole inside the Genius Act, which lets people earn yields on their stablecoins. That's why the banks are telling the OCC to slow down, stop trying to give them a license, because they're losing so far. And so far, whatever they've tried didn't work. Sure, it longed it out, but during that long period, Ripple was able to expand internationally, get licenses internationally, make partnerships internationally, acquire companies internationally. So whatever they've tried so far, it just hasn't worked. And they are losing badly. Miles, I think XRP might drop drastic to shake people out. What do you think, Miles? Yes. Possibility? Yes. High. On the last question, tokenization will be the financing tool, regardless of matter of retail welfare. Fact. Yes, I agree. It's not a question, it's more like a statement, but yes. Can you pray for me? No problem. I pray that you're doing well. Let's go, Miles. Coin move, pump it up. Let's go, Ian. Let's go. Got to go. Thanks for answering again. Good night, Miles, and God bless D. Let's go. Live count just hit 1,000 on X, Miles, for your information. Let's go, CMF. Shelly, let's go. Thank you so much. Amazing that we're on 1,000 viewership right now on X, but for some reason Restream is still showing 26 over here. But we're on 1,000 viewership. Hi, why crypto is dumping and bull rock gonna miss? Johnny Crypto's manipulations, what's going on right now? House needs to win before we get to the rate cut section and the Clarity Act section next month. Bitcoin falls on 110,000. Let's go in. Thank you for the update as well. Shelly, thank you for the update as well. Now, global exchange regulators push and back essentially on tokenized stocks in the SEC letter. On the topic of banks crying, genuinely, on the topic of banks crying right now, global regulators are angry that tokenization is about to take over. Exchange industry associations and global regulators are joining forces to curb the growth of adoption of tokenized stocks, arguing that these products do not represent actual essentially equities and expose investors to significant risk. According to retainers, the European Securities and Markets Authority, ESMA, the International Organization of Securities Commissions, and the World Federation of Exchanges, WFE, have sent a letter to the US Securities and Exchange Commission, SEC, Crypto Task Force, urging a stricter regulatory oversight on tokenized stocks. The organization argues that tokenized stocks mimic the equities they are designed to represent, but lack the investor protections built into traditional markets. They're even angry tokenization is expanding. We are alarmed at the essentially of the brokers and the crypto trading platforms intending essentially to offer so-called tokenized US stocks. So-called tokenized US stocks. The WFE told retainers, without naming specific firms or platforms, these products are marketed as stock tokens or equivalent to the stocks when they are not. They push the carrier's weight given the influence of the treasuries, and the EMSA is a European Union agency and one of the bloc's three main financial supervisory essential authorities. The IOSCO is an international body that sets standards for security regulations and investor protections across global markets. The WFE, headquartered in the UK, is an industry group representing exchange and clearinghouse worldwide. The crypto sector is going to be changing everything. The call for clampdowns comes as tokenized securities gain traction essentially on Wall Street and beyond, driven by essentially the promises of greater efficiency, lower cost, and broader market access through essentially blockchain technology. The value of tokenized essentially assets has already climbed past $26 billion, according to industry data. Tokenized stocks, digital representations of traditional equities issued on a blockchain, remain a small slice of the market, but their footprint is expected to grow as a major platforms such as Coinbase, Kraken, and Robinhood move into the tokenization sector. This isn't the first time traditional industry lobbies have joined forces to slow the growth of blockchain innovation. As the US lawmakers muled over the Genius stablecoin bill, banking groups essentially quietly lobbied to exclude yield-bearing stablecoins, a feature that could have directly competed with their service offerings, which they were unable to do it properly, and the loopholes still exist, which means people can still earn on their stablecoins. They were ultimately successful some parts, not all parts. While the passage of the Genius Act was essentially widely seen as a win for the stablecoin industry, it also came with a trade-off. Still, the SEC appears to open tokenization at the highest level. In July, the SEC chair, Paul Atkins, described tokenization as innovation that should be advanced within the US economy. That same month, the SEC Commissioner Hester Peirce stressed that tokenized securities, including equities, must nonetheless comply with existing security laws. So, not only are the banks crying right now because of how much innovation is happening inside the crypto sector, and people might start to catch on that maybe crypto wallets are better than bank accounts, but also the brokers essentially inside the stock markets worldwide, you can pretty much say, are angry of tokenized stocks. The world is completely going to be changing right before everybody's eyes. Whether the banking industry likes it, whether essentially the brokers like it, or institutions like it, or whoever likes it. There are certain power plays going on right now in the world, and certain people want this world to go towards a digital future. And it seems like those certain people are winning right now. Now, Canary Capital is what we're going to talk about next. But before we talk about Canary Capital, let's start the conversation first. As I said previously, this is live, which means if you have any questions, please put those in the comment section. More than happy to answer them for you. Let's see where we're at. We were at here. Miles, do you think banks are scared of Ripple as well because they are a private company? Yes, 100%, 1,000%, 1 billion%, 1 trillion%. Ripple staying a private company threatens the banks. It threatens BlackRock, to be fairly honest, because they can't control it by buying its stocks. Ripple staying private shows strength. It shows power. Honestly, in my eyes, the bigger that Ripple gets and it stays private, it shows power and strength, which is pretty much the same word, but you know what I mean. Miles, you missed my question. What was your question? What's your question? If Ripple becomes a bank, it will sometimes, if Ripple becomes a bank, it will be sometimes before they earn the trust from the regular peoples that they don't know nothing about blockchain. Yes, I agree. Now, Canary Capital files for an American-made crypto ETF. Canary Capital has filed for a new ETF that will focus only on US-based digital assets. With the US Securities Exchange Commission, SEC, this fund, called the Canary American-made crypto ETF, aims to give investors access to a carefully selected group of cryptocurrencies that are connected to the US. According to the filings, the proposed spot crypto ETF would only hold digital assets that meet specific US rules. This includes cryptocurrencies created in the United States, tokens mainly produced in the US-based networks, and blockchain projects that have most of their operations located inside the United States. Furthermore, the ETF tracks the Made in America Blockchain Index, which showcases blockchain projects from the US. The index essentially includes various projects that focus on transparency, regulatory compliance, and meeting American technology standards and values. Notably, the filing did not give details on the specific coins. However, if approved, this would be one of the first ETFs to focus on location of assets and clear regulations as key investment factors, with increased regulatory central attention on foreign digital assets. And Canary's initiative could lead to compliant investment options in blockchain. This essentially is brilliant to see. American-made ETF. We know what's going to be inside of it. It's not going to be Bitcoin. It's not going to be Ethereum because they're not American-made. It's going to be essentially XRP, HBAR, XLM, Cardano, Solana, and the list goes on. American-made crypto ETFs. So, Made in America ETFs coming soon your way from Canary Capital. The more essentially we see companies going towards that sort of ventures inside the US, the more liquidity is that's going to be provided for those American-made assets, which is brilliant because the number one asset in the US pretty much is the XRP, American asset. Now, Japan. Japan's finance minister is what we'll talk about next. Says cryptocurrencies can play a role in diversified portfolios. Japan's finance minister essentially said today that cryptocurrencies could form a part of diversified investment portfolios, despite their essential volatility, stressing the government's intentions to encourage innovation without over-regulation. Crypto assets carry the risk of high volatility, but by creating a proper investment environment, they can be one of the options for diversified essential investments. Kato said in a speech at the WebEx 2025 conference in Tokyo, according to a Bloomberg report. He added that the government seeks to seek innovation and is not held back by its essential restrictions. The remarks come as Japan faces concerns over its debt to GDP ratio of above 200%, fueling worries about the future of financial repressions and potential yen essentially depreciations in such policies, which can essentially involve low or negative real interest rates. Inflation and capital controls tend to erode and returns on cash and bonds, making alternative assets like crypto more attractive. Japan has the highest debt to GDP ratio in the developed world, standing about 255% in 2024, according to the IMF data. The Bank of Japan ended 8 years of negative interest rates in March 2024, but has maintained only minimal hikes, keeping real returns on essentially savings close to zero. The backdrop has fueled essentially investors' appetite for risk appetites, including foreign equities and digital assets. The more the traditional market space essentially goes on the side of collapse, the more the alternative market space, which is cryptocurrencies, is going to get liquidity entering into it. The current regime has long criticized with biased domestic exchanges such as Bitflyer and CoinCheck, which argue it discourages active trading and drives Japanese investors to offshore platforms. A flat tax would align Japan with global peers such as US and EU, where crypto capitals gain our tax and standards investment rates. A 2023 law revision already legalized issues of stablecoins by licensed banks and trust companies. Mitsubishi UFG Trust has piloted Programmer Coin, a yen-backed stablecoin aimed at settlement use cases. Japanese firms have also been expanding into the blockchain. SBI Group recently partnered with essentially Chainlink, and obviously they have Circle and SBI Ripple. SBI, one of the largest Japanese financial groups, also operates as SBI VC Trade, a licensed exchange under Japan's strict regulatory framework, and invested in more than 20 crypto ventures since 2018. So Japan sees its market space slightly on the failing sides and decides to open its doors to the cryptocurrency sector, which is incredible, positive, adds quite a lot of liquidity towards the table in the long term, not overnight, but in the long term. But extremely positive news on Japan's side. Now, Gemini and Ripple. Everybody's seen the news that's going around today regarding essentially Gemini XRP bank card, which essentially if you use it for everyday purchases or everyday transactions, you earn 4% cashback in XRP on whatever you purchase, essentially. Now, everybody, I'm guessing, has tried in some sort of a way to apply for this XRP bank card, especially if you're somebody that holds XRP and so on, and you will earn more XRP on top of that. Unfortunately, it's only available in the US, as far as I'm aware. It's not available in the EU or the UK, most countries. It's only available in the US so far. Most likely, they're going to be expanding on a worldwide basis somewhere down the road. But unfortunately, it is only available in the US. But how the bank card essentially works is, essentially you spend US dollars, and then your rewards will be 4% back in XRP, which I think personally is a brilliant idea in that sense. So Ripple is stepping into a new era as significant strides are being made with the company's recent developments, closing various legal battles and seeing an increase in exchange-traded products and inflows as well as strict acquisitions. By 2025, long-time XRP coin holders finally begin to see the fruits of their investments. However, the story of XRP coin is not ending. Gemini recently essentially unveiled crucial updates regarding its operations. Gemini, a notable partnership with Ripple, launched an XRP version of its credit card. This move is designed for US customers and provides rewards in XRP coin. Users can earn up to 4% cash back, essentially back on gasoline electric vehicle charging and shared essentially rides, along with additional cashback rates of 3% on dining and 2% in supermarkets. With this initiative, spending essentially with XRP becomes a unique way to potentially boost one's investment, offering cashback rates as essentially as high as 10% on selected stores. Gemini's focus on XRP coin is due to its outstanding price performance. This upswing gained momentum after anticipation of Trump's election and Gensler's resignation, essentially on January 20th. The essentially peak or added significance of the 4% rewards, the potential near 500% appreciation of the cryptocurrency assumed through rewards turns those into approximate 20% discount on purchases. This highlights essentially the enduring attraction of credit cards with crypto reward features. Tyler Wickwoods, the Gemini's co-founder and CEO, called their credit cards a step towards the future of finance. Through the exclusive XRP edition, they aim to give customers, as well as the XRP community, new opportunities to showcase their dedication to XRP. From these developments, the partnership between Ripple and Gemini delivers several tangible insights. The collaboration introduces Initiative financial tool by integrating XRP into everyday spendings. XRP's performance plays a significant role in redefining reward systems through enhanced cashback strategies. Consumers are offered not just rewards, but a path to potentially increase their financial holdings. Gemini's collaboration with Ripple signals a new chapter inside the crypto space, turning everyday transactions into potential wealth-building tools with streak innovations like the XRP credit card. The initiative promises to further enrich XRP's status in the realm of digital finance. So, if you are essentially in the United States, you can apply for that. If you're not in the United States so far, you can't. I tried, believe me, I tried so hard, but it's because I'm not in the US, I can't. But extremely positive news on Gemini's side. Also, Gemini does have that line of credit with essentially Ripple as well for RLUSD. Let's not forget. Now, SEC delays decisions on XRP ETF filings until October 2025. Now, you might be wondering to yourself, why is there a delay in the XRP ETF? It goes back to something I said about a week ago, which was, I personally think the SEC is waiting because there's no reason for them to reject an XRP ETF or to even extend it, to be fairly honest, unless The SEC is waiting for the Clarity Act to pass in September, and a week later to get signed essentially by Trump and essentially become a law. That's the only reasoning of why the SEC would sit on the sidelines and not approve any of the ETF filings they have, especially on an XRP one, because for them to have a better understanding, they know the ins and outs of XRP, the XRP ledger, and Ripple itself. So there's no reason for extension of we need more time. Time of what? You know everything you need to know about XRP. You know more than anybody else inside the United States about XRP. So there's no reason of extending unless you're waiting for something to happen, which most likely will be the Clarity Act. Because the Clarity Act essentially brings clarity towards the crypto space. It brings clarity towards institutions of what they can do inside the crypto space. It brings clarity for banks of what they can do inside the crypto space. It brings clarity towards the SEC because they know what they can do inside the crypto space, what they can't do. Also for the CFTC on what they can and what they can't do. So the reason is on why maybe the SEC is still waiting on the sidelines is the only reason that essentially I can even think of, which I mentioned last week, is because they need the Clarity Act to pass. Because there's no other reasonings whatsoever of an extension or even a rejection, which is not going to be possible whatsoever. A rejection is just not on the books. Extension still makes no sense because they know the ins and outs of the XRP ledger, XRP itself, RLUSD, and Ripple itself. So there's no point on we need more time to think about it. So the only reason would be they're just waiting for the Clarity Act to pass, which is next month. Let's not forget Eric and James, who said Bitcoin ETFs will happen in January, and they said the exact date it will happen, when everybody else around Eric and James said, nope, never going to happen. Eric and James from Bloomberg, ETF specialist analyst, said 90% is happening in January, and they said the exact same date, and it happened. Eric and James are still standing at 95% this year, XRP ETFs. 95% they said this year, XRP ETFs happening. And the extension has went up to October. Has postponed its decision regarding multiple spot XRP ETFs and other essentially ETF filings until late October 2025. This delay includes the application from WisdomTree, following the comprehensive evaluations involving several prominent industry entities. Also, straight after the Ripple case ended on paper, all the ETF applications for XRP were amended, all the filings were amended. Several essentially major asset management companies are involved in these ETF filings. Notable among them are WisdomTree, Grayscale, 21 Shares, Bitwise, Canary Capital, CoinShares, Franklin Templeton, and potentially essentially Rex, Osprey. The list just goes on for XRP ETFs. These firms are established players inside the financial sector with a history of managing ETFs and digital assets. The involvement of these asset managers signals a strong interest in bringing a spot XRP ETF to the market space. Each entity brings a wealth of experience in either the traditional financial space or managing digital asset funds. The SEC's decision to extend the review period might be a result of ongoing regulatory discussions aimed at refining the approach to cryptocurrency ETFs. As per their analyst from Bloomberg, the resubmissions were likely influenced by feedback from the SEC. Almost certainly due to feedback from the SEC, broadly expected updates, signs of process moving forward. So according to Eric and James from Bloomberg, it's actually moving forward regarding the XRP ETFs. James, for example, the ETF analyst specialist from Bloomberg, analyst estimates that the approval of a spot XRP ETF could lead to $8 billion in institutional retail inflows. So James and Eric have just, essentially blatantly said, 95% chance XRP ETF happening this year. 95% chance is happening this year, XRP ETF. Not only that, they said the moment it gets approved, expect $8 billion to be entering into it in new institutional retail inflows. This will significantly impact the cryptocurrency market, mirroring past reactions seen from Bitcoin and Ethereum ETFs. The anticipated approval of these ETFs may enhance investor demand, not just for XRP, but potentially boosting interest in other altcoins as well, because there's going to be other ETFs. These market dynamics would emulate the boost seen previously from essentially other ETFs. Among the cryptocurrencies, XRP is the primary asset affected by this ongoing regulatory review process. It is expected that any decision on the ETF could influence XRP's market activity significantly. The SEC's phased approach to ETF approvals for Bitcoin and Ethereum has recognized their impact on market dynamics, and previous approvals cycles have been essentially pre-seekers to essentially substantial market movements and liquidity shifts. The delay by the SEC indicates a strict decision to extend the evaluation period. It aims to ensure that appropriate regulatory frameworks are in place, and that this timeline extension allows for additional input and regulatory alignments necessary for a comprehensive review process. As the regulatory landscape for cryptocurrency evolves, asset managers and industry stakeholders remain optimistic. Market participants anticipate the SEC's eventual decisions could pave the way for similar ETF approvals in the future. 100% they're waiting essentially for a Clarity Act to be passing through. If they pass it beforehand, brilliant. But they're waiting for a Clarity Act to be happening so they know where they stand. Eric and James still standing on 95% chance XRP ETF happening this year. Also now suggesting $8 billion will be entering into XRP pretty much once it gets approved as an ETF. I'll be honest, out of all the ETFs, XRP has by far the most amount of applicants, filings by far. And that just shows you, even in Eric and James' words, the amount of interest there is for an XRP ETF compared to other ETFs out there. On that note, expect a rate cut in September. Expect on the 30th, essentially at the end of the month on September, for a Clarity Act, and 1 week after that, a signing in October. Expect some sort of an XRP ETF because Clarity Act passes and pretty much is going to next month. On that note, we have also reached the endings of tonight's live. This was the CMF Live. It stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news on cryptocurrency, CBDCs, AI, politics, regulations, pretty much vital information for you to know about regarding the world completely transforming into a digital sector. The disclaimer of this live, as always, has been not financial advice, not political advice, and whatever I say is only for entertainment purposes. And on tonight's live, we talked about a lot of news. We talked about international news, talked about some XRP news, some Chainlink news, some Solana news, and so on. A lot of news went on tonight's live. It's actually, I think, our longest live so far, to be fairly honest. This was also episode 360 of the CMF Live. Episode 361 will be tomorrow. Before we do go, let's go start the comment section, obviously. Let's see what's happening over there. Let's see where we're at. Let's go, Miles. I like so much how you reviewed how Ripple XRP stands strong on the crypto markets. Let's go, Cali. Can SEC extend more on that? Possibility. There's a possibility, but they have to come up with reasons if they're going to keep on extending it. Night, Miles and CMF. Pablo, let's go. See you tomorrow sometimes as usual. Thanks, Miles. Good night, CMF. See you tomorrow. Or if I see you tomorrow sometimes as usual as well. Good night, Miles and all CMF. Thank you for a great live and news. Let's go. See you tomorrow, JP. Same time as usual. Great news, great show. Thanks for all the updates, Miles. Let's go. CZ. See you tomorrow sometime as usual as well. So reassuring listening to your live with you giving us the latest news about crypto. Thanks for all you do for us. Have a great night, Miles, and see you tomorrow. Same time, Artistic. Let's go. See you tomorrow. Same time as usual. Thank you so much for the kind words. See you tomorrow sometime as usual as well. Awesome. Awesome. Love, bro. Take care, Miles and CMF. Remember also to like, share, and leave a comment for support. Facts. Let's go, Ray. See you tomorrow, brother. Same time as usual. And facts. Like, comment, share, and retweet if you already haven't and you're watching this on X. And if you watch this on YouTube, just drop a like and put a comment outside the live as well. If you followed and subscribe to me during this live, thank you so much and welcome to the CMF and tune to this live Monday to Friday, 10 p.m. London time onwards. Good night, Miles and CMF. I was late. My apologies. No problem, Lena. Good to see you as well. How you doing? Good night, Miles. Cali, let's go. See you tomorrow sometime as usual. Thank you, Miles and CMF. Good night and see you tomorrow. See you tomorrow, Mike, brother. Same time as usual. Good night, Miles, and thank you, Stormy. Let's go. See you tomorrow sometimes as usual as well. Good night, Miles and family. Great live. Many thanks. See you tomorrow. Ian, see you tomorrow sometimes as usual as well. Thanks, Miles, and for another great evening. Let's go, Addy. See you tomorrow same time as usual as well. Okay. Good night, everyone. Black Soppy. Let's go. See you tomorrow same time as usual as well. Okay, I will see everybody tomorrow. Same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. See everybody tomorrow for episode 361 of the CMF Live. Like, comment, retweet if you already haven't. If you have, thank you so much. And if you followed and subscribed, thank you so much as well. Welcome to the CMF family. Thank you, Miles and CMF. Have a great night, and I'll see you tomorrow. Carlos, see you tomorrow, same time as usual. I will see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. Great live, as always. Thank you, Miles. Let's go, Shelly. See you tomorrow, same time as usual as well. See everybody tomorrow, same time as usual. Love you all for episode 361 of the CMF Live tomorrow. Also, the disclaimer of this live, as always, has been not financial advice, not political advice, and whatever I say is only for entertainment purposes. Thanks, Miles, for this great live show. Always a pleasure to listen to your opinions in the crypto sector. Great job. Let you rest, my friend. Let's go, Carl, and see you tomorrow, same time as usual as well. See you tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. Love you all. See you tomorrow. Miles, do you think the banks are scared of Ripple because they are a private company? Yes, I do. Yes, 100%. See you tomorrow.